Hello and welcome to another update video about Bitcoin. So for Bitcoin, as you will probably know if you've been following me in the last videos, we do expect here further downside, possibly after a little bit more upside all the way up to 30.68k. That would be the maximum this wave 2 in white can do and should do, because if we go above that, it will just be a bit more tricky. This will be definitely an important resistance along the way. Now the wave 2 technically could already be finished. It would be a very short wave 2 though, but nothing impossible. We are already turning down here, and what would be important on our journey down and for the bears would be to take out here obviously the previous small swing low at 29.48k, then the next swing low here at 29.25k, and then we can make it to the wave X, which would be at 28k. As soon as we can get below 28k, this would be, in my opinion, the trigger to then have quite a significant sell-off all the way down to the wave 3 at 25.4k. And then my view is that we should ideally, as this roadmap shows, that we should really move down lower and actually end somewhere below this wave 3, because this is the red wave 3 down here from the 12th of May at 25.4k. We now moved up in a wave 4 in a WXY double zigzag Elliott Wave pattern, which is a corrective pattern, which would indicate that after this wave was finished to the upside, we are actually moving down impulsively, which means we are actually moving into the direction of the higher level trend. Because the WXY is a corrective pattern, this indicated we were moving against the higher level trend, which is followed by another move into the higher level trend, which means that we should make a lower low. Yeah, because this means the downtrend, the overall downtrend, hasn't finished yet. And that is what we're looking here at the moment, in my opinion. We are in a descending wedge at the moment. I'm not overlooking that, absolutely, and usually they would break out to the downside, but to be honest, I mean, this is in line with the wave 2. So the wave 2, you would normally expect a longer retracement. Yeah, I mean, it's already turning down here, but you would normally in a wave 2 expect a longer or larger retracement, because the wave 1 started up here at 32.4k, so we can actually draw the Fibonacci retracement levels for that wave 2. And that should actually normally take us here to, in this region between 30.45k and 31.7k from a retracement point of view. So more upside for that wave 2 would actually be expected. If it doesn't happen, then we'll probably need to modify this shorter time frame wave count, and it would mean we go down further and faster. And that would mean that we might have finished this wave 1 already here, but I don't want to make it too complex. So I'll keep you updated. What is important to understand is that should we move below the previous swing low here at 29.25k, that we have imminent downside potential here to the wave X, which is at 28k. Should we break out to the upside of this descending wedge, which you can keep an eye on, when you're watching the chart, I think first of all, first target would be the previous swing high here at 29.9k. I wouldn't think it will stop there though. I think we will test the wave 4 high at 30.7k. Should we move above that, then we need to be careful that we're not retracing too high, that it gets unlikely that this still is a wave 2. At the moment though, it's all looking like it. The way we came down here was always very impulsively, and those moves to the upside were very corrective, which indicates that, hey, we have already started the downturn and we have finished this higher level wave 4 up here, and we are already on our way down. Bear in mind, it's weekend. Any move is a bit more unpredictable on the weekend. There is less volume in the market, so that a breakout to the upside of that wedge, I know it would trigger a lot of bullish sentiment again among other YouTubers, among retail traders, but especially on a weekend, and especially with this Elliott Wave count, it would explain why this could be very well a fake out. So I'm looking here at the moment definitely for further downside. A move above 30.68k would make that a little bit less likely. However, really, I think really only when we get here into the region, and I'll put that on the chart so we can keep an eye on it, only above the 88.7% FIB level, I think it is going to be unlikely that this is still a wave 2, because a wave 2 can retrace all the way up to the 88.7% FIB level. So we're talking here about 32k. So should we in the current wave count move above 32k, I think we are going to enter once more into this target area. That means the wave 4 isn't finished yet, and it will just mean another longer correction, another lap of honor for Bitcoin here. So these are the two key levels to watch out for on the upside here. The 30.6, what did I say? Because it's always a bit, you need to be accurate here. Sorry, 30.68k. And above that, what is really relevant is the 32k level. Yeah. So to the downside, talked about it. These key levels here, the previous swing low and the wave X low. And we are making here another bear flag in my opinion. So it is all pointing for me for further downside, but it could be that we short term, should we break out of this wedge to the upside, that we see some short term upside. The risk of this is, especially if we don't see the volume, that this is just a fake out, and that would be, in addition to the Elliott Wave count, a strong indicator that we move down further. Because what often happens if you have a fake out, and these patterns can often be fake outs, so if you have a fake out, especially on a weekend, that when you then break down, that this is quite a bearish sign and you just go through. So that is what we're looking out for here at the moment. So that is my view here at the moment about Bitcoin. Yeah, not too much movement. It's a bit quiet. So maybe let's take one more look here at look into Bitcoin. Just want to show you the latest fear and greed index, and we can currently see that we are still in extreme fear. So it hasn't moved a lot. I think we were already at 8 here a few days ago, or 10. Lowest I've ever seen, I think, was 5. So there is more downside potential also on the extreme fear scale here on the fear and greed index. It just represents the two key emotions in financial markets, and this is eventually what makes those patterns. This is why the Elliott waves work as well, and this is why we can see these patterns on the chart. It is the change of optimism to pessimism and back to optimism, this fear and greed. Yeah, it's often not the fundamentals that are making the prices. It is fear and greed. So yeah, at the moment at 14, recovered a little bit in the last few days, but we're pretty much still very, very low here. And it is worth keeping an eye on it as soon as we move from extreme fear into fear and then neutral. This definitely indicates a shift in sentiment back to the upside. At the moment, it is way too early to talk about that. We are still in the extreme fear phase. Okay, and that is my view here currently about Bitcoin. I'll keep you updated. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.